So you keep the numbness aside. For me, what really matters is the big picture. And the big picture, I think, for me is far more satisfactory than anybody would have imagined exactly 2 weeks ago or exactly a week ago. We've got a weak handover, I accept that. But in general, global markets have been trending higher. Crude has been trending lower. Yields have been coming down. And all this hullabaloo in and around China, that China is the real deal, it's going to make a comeback. The stimulus package and the real Sigma effect of that stimulus package clearly seems to be fading away. Bottom line here is that gold has gone back to where it was, let's say end of September, in terms of financial assets, which is a slow but a short trend on the upside for US stocks. China, after a real royal comeback, seems to be settling down. Crude, the natural direction because of demand, seems to be lower, and yield, which had inched up to 4.2 or 4.3%, seems to be narrowing down. So that's the global setup for you. I would say that the US macro is okay, oil is stable, yields are flat, and the China comeback trade is again on a back burner.
Okay, so the overall big picture is looking quite robust. That's the word coming in from Nikunj. But let's also find out what the cues were on D Street just yesterday then. And taking stock of that, you did have the Nifty, which held on to that, forming a base around the 25,000 mark. So for the 8th straight day on the trot, we were hovering around the 50 daily moving average. And it's interesting that you did have the broader market as well that held out at a time when a heavyweight, and that is none other than Reliance Industries, stuck out like a sore thumb in trade. In fact, you did see a breakdown from the 8 straight days of consolidation that we have witnessed, and volumes were at nearly the 2 times the 20-session average. Third consecutive week that you have seen a decline in Reliance Industries. Nikunj, so how are we looking at the overall trade setup, the fact that we have seen the FII sell-off, market cap erosion as well, and the Nifty forming a base at 25K?
Yeah, so let's take everything one by one.
Yeah.
I think, like I said, global markets are in a fine fettle, and markets are making a base around 25,000, plus or minus 1% here or there, but the base building in markets actually has started. Earnings, early indicators are saying that we are not in for a great earnings season, but I guess somewhere that would be more like a stock specific adjustment. So if you connect the dots here for India, you're making a base in and around 25,000. Global markets are looking calm but stable. FI selling seems to be simmering down a bit, and if the local flow is anything to go by, this market is finding support at lower levels. So I would like to use the word little. I see little downside because of flows and global strength. I see little upside because earnings are not going to be great and valuations are still not very cheap. So the upside is limited, the downside is limited. What may happen is you may see a lot of individual and stock specific volatility. So you could be in for a market for next couple of days or weeks where the market actually does precious little. It may sound boring, it may sound ordinary, it may sound very non-enticing in terms of finding pockets of momentum, but I think that is the way markets are. Little upside, little downside, lot of volatility. Haven't used the word in this in a while, but I think that word which we use in Bombay often, time pass. So I think we are moving in that stage of the market where markets don't have to go up every day. And this, I think, is a great outcome that the concerns have gone on the back seat. There is stability which is coming back. So little downside, little upside, lot of volatility, complete time pass.
Yeah, they just have to pass time, abide by it just about in this range. But yeah, Reliance definitely, that also sort of single-handedly weighed quite heavy on the markets yesterday. I mean, he managed to hit a 8-month low. The short build-up was quite strong, OI down about almost 5%. And it's been seeing a breakdown.
So Aisha, when that breakdown in Reliance started, I thought it was more like a country call which some ETFs have taken, and they were selling Reliance down and India was going down because of that. But one is getting a sense that there seems to be a specific view on Reliance which institutional investors are taking now. The view on Reliance cannot be just, Reliance is such a large stock that for the stock to go up or down, it cannot be governed by retail folks or by HNI investors. It really has to have institutional participation. Now, from an institutional standpoint, Reliance is going through what could be called as a series of cyclical downgrades. These are earnings downgrade which in a sense have been pulling the stock down, which is nothing great has come out from their O2, their old economy business, we call it as the O2C business. Geo seems to be stalling a bit, retail one bad quarter, one good quarter. Nothing big has come in terms of where the company or where the business is headed in the near term. The new energy business, while the option value of that is not out, but nothing new has come in that also. So I think that's the way how Reliance has moved in the past. It goes into this hibernation and then it tends to come back once clarity comes through. But I think in the near term, I think it's the institutional view which could be linked with the earnings call, which I think is evident, which really explains that why markets are down. So let's look at that data from 27th of September. Why are we insisting on 27th of September? Because that was the time when markets were at a record high. So Reliance has single-handedly taking the markets down, or 30-40% of the carnage in the Nifty has happened only because of Reliance. So I think it's a stock specific issue here where institutional investors are saying what are the triggers in the near term, and that in a sense is having impact on the stock. So first I thought it's like, okay, someone's taking a view on India and then India specific ETF selling has come out where Reliance was in heavyweight. But I think it's more like a stock specific cyclical downgrade concern which is biting the stock.
Okay, yes, indeed. And that is the overall picture when it comes to Reliance Industries and how one should look at that. But time to shift gears then and talk about all things auto, and it's Bajaj Auto that will be in the spotlight ahead of the Q2 numbers. And here's what the street is anticipating, that the revenues could be bolstered this time around by volume growth as well as better realization. So we're going in with expectations of a revenue of 13,300 odd crores. Margins are penciled in at about 20%, and that's largely going to be boosted by the net pricing. The CNG model impact is also going to work its way into the numbers, and we'll have to watch out for the demand outlook and what the outlook is when it comes to e-mobility as well as CNG initiatives. And Nikunj, this coming in at a time when yesterday you had the mammoth Hyundai India IPO, which received a steady response on day one.
Look, Bajaj Auto and Hyundai IPO are two different things, so it may not be a good idea to compare it. But yes, if you single out Bajaj Auto in terms of where the stock is, it's down 9%. But it is one of the ranked outperformers in last 1 year. And the returns for Bajaj Auto in this year, they're absolutely amazing. The company has been on a steady track, so to speak. And if the early indicators are anything to go by, it's reasonable to assume that the numbers would be strong. The stock has not seen a run-up or built up in the run-up to the numbers. If numbers are decent, which is where they've been surprising everybody, great margin management, CNG launches have been decent. If the forward commentary remains constructive, that the rural economy uptick, what we are talking about, is a real deal, and two-wheelers will move independently of four-wheelers, then the stock may just start outperforming again. Because even though it has given great returns in last 1 year, it's not very expensive. And for a stock to move immediately after the numbers, what matters is that what it has done in last 15 days ahead of the numbers, and that's where Bajaj Auto is actually down. So bit of a endorsement of the same, that things are moving in the right direction. I will not be surprised that Bajaj Auto then could really give you a surprise post numbers if the numbers are decent, because the numbers normally come during market hour, and expect that you could be in for a good move in the afternoon session for that stock.
Okay, that's the view on Bajaj Auto. So while we're not comparing it, Nikunj, to the Hyundai IPO, an 18% subscription is what we saw till 5 p.m. on day one. How are you looking at the kind of response that we've seen?
See, the issue will sail through. So I don't think there's a problem that they'll not be able to raise 20,000 crore. The point is that will it really create excitement, and will it really be the talk of the town? The answer to that may well is an absolute no. A, the time is different. B, the issue is also you cannot compare Maruti and Hyundai, which is what everybody is doing, that okay, Maruti is trading at X and this is at a deep discount to Maruti, so go and subscribe. I don't buy that theory, because we are looking at a different franchise, different margins, different market share, different profile. C, the auto industry per se is going through a cyclical downturn. 4, the size is so large that this again would be an institutional dominated stock, not a retail dominated stock. So issue will sail through. You may not get an IPO zing. I will not be surprised that if you actually see a flat to a very mild positive listing for Hyundai IPO, unlike what we've seen in the previous IPOs. So the IPO pop is out, grey market premium is gone. This stock will qualify for someone who wants to invest in it for next 2 or 3 years, because this company in a sense has demonstrated ability and capability. It can grow at a rate which is higher than the industry average, and the stock can do much better than what, let's say, the pack or what, let's say, the nifty would do. I'm just thinking through it, that the minute you say Mahindra and Mahindra, you would say a story built on SUV. The minute you say Maruti, you would say a story built on small car with 45% market share. The minute you say Tata Motor, you would say EV and JLR. What is that X factor for Hyundai? They're good and great in everything. So 14% market share, holding on, great return ratio, but markets always look for that X factor, which frankly is not there.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 1,865 to Rs 1,960 per equity share of face value of Rs 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.